Hi there, guys, and welcome to this week's episode of Midweek with Indiacharts. I'm Muskan Kapoor, your host, and we're joined here with Jay Bora. I'm going to ask him a set of questions, and he's going to answer them, and we're going to understand how the market can be placed for the following week. So I will just get started without any further ado. I wanted to know about the CFTC speculative net short positions because they've once again hit record levels, and S&P has gone nowhere. So, what is your take on this?
Right. So I'll quickly share my screen. So
Hmm.
if you can see over here, I mean, this is the CFTC net short position. So this we had discussed earlier as well, that the net short was somewhere around 3,55,000 contracts. But this time around, I mean, this gets published every Tuesday, and that is data till Friday of the previous week. Okay, so that data has come by, and once again, I mean, there has been a record shorting. So I mean, the reading is record shorting. So over here, as you can see, it is 3,76,000. And once again, if I zoom out the chart, then you can see that the short position is almost at 7-8 years high. So we had discussed this last time. If you see the chart of S&P 500, so basically when you do the weekly chart, it is somewhere around here that they have started shorting aggressively. Okay, and that is where the S&P 500 has gone nowhere. Now we had discussed earlier that 4,200 to 4,150, that is basically the resistance zone, and somewhere S&P is not able to cross this hurdle as of now. Okay, but when we dig deeper and when we look at the daily chart, you will see that it looks more like a consolidation only, and eventually it should break on the upside. So my guess is that once the high, the recent high, which is 4181, I think once that is broken, or in fact once this resistance zone is broken, so on the higher side you can take it as 4,200. I think the high is 4195. So I think once this high is broken out on a closing basis, then I think most of the people's stop loss will get triggered, and you can see right now that I mean, the speculative position is I mean, indicates that there is record shorting. So I think there can be a good short covering rally as well, and that's where we can see some positive momentum in S&P again continuing. But as of now, you can see that this sideways structure is more of a consolidation.
Correct.
And I think once 4195 to 4180, this is the resistance level. If that is taken out on a closing basis, then there can be a good rally. Now, even if you step back and if you hear the news flow, so couple of, I mean, few Fed members had spoken, and most of them, I think apart from one, I forgot his name. So only one Fed, I mean, member, he said that there is requirement for more rate hikes because still the inflation is very high. But apart from that, the other Feds, they just said that I think what we have done is good enough for now, and we'll wait and see how the data plays out. And if I mean, if the data is still very hot, then they will decide of a rate hike. But as of now, they feel that it is appropriate. In fact, one of the Fed even said that by the year end, they see inflation coming down to 3.5% approx level. That is because of the base effect, because we are seeing high inflation for last many months now. So at some point of time, base effect will kick in, and that's where we will eventually see the inflation cooling off, on year basis on that high base. So they said that somewhere they are expecting around 3.5% by the year end. Okay, and so basically in terms of news flow, there are no major negative news flow that we are getting right now, because even the bank crisis which was there, even that risk has been abated as of now. Okay, at least you are not seeing news of collapse of bank every other day like it was happening in the past 1 or 2 weeks. So that's my best guess, that I think once we break about this range of 4180 to 4195, that is where I think the rise in the S&P can take place, and that's where it can lead to positive impact on the other global indices as well.
Correct. Makes sense. So we have to keep looking at how this is going to be placed in the future. I will just move on to this discussion we were having since the past few weeks, dollar and the gold rates. So the dollar index has closed above the 40-day exponential average. Has the trend reversed now? How is the gold and silver setup looking like right
So I think we had spoke about this last time. So earlier, I think it had taken resistance around this 40-day exponential average, and it looked like that it will break the low. But again, I had highlighted earlier as well that the close below the support level is very important, because that's where it will indicate that the next leg of down move is likely to play out. But you can see that dollar index took support over here, and also the retracement was it had barely retraced, I think 38.2% of the previous fall. So yeah, it had even not even retraced 38.2%. So only now we had seen a break above the 40-day exponential, and it has done the retracement. Now, in fact, interestingly, you can see the rise from the bottom is a 5-wave rise, and in the overall context, this is A, B, C pullback. Now, what that means is that this is the actual trend which is down, and we are right now seeing a counter trend rally, and the counter trend rally in ABC could be maturing. Now, what can be the point where we say that the ABC rise is complete? So the first thing will be that we get a negative close. Okay, once we get a negative close, we can say that this could potentially be getting over, that is the 5-wave rise would be getting over, and then the break of the low of wave 4, which is at 101.78. Once this breaks, then it is furthermore confirmation that the 5-wave rise is complete, and the 5-wave rise in wave C is complete, and this entire ABC structure is complete, and we can start the next leg. Now, I'll show you one more interesting thing. If we see the weekly chart, this 5-wave rise seems to be maturing at the 20-week average. Okay, so over here as well, like I said, once we get a negative daily close, that will be the starting point to think that the 5-wave rise in wave C is complete, and then the break of the low of 101.78. Once we see that, that will be a further confirmation. Now, in that context, there was a risk in gold, which I had highlighted that because last time when we spoke, it was somewhere over here. So it was taking support at the 20-day, and I was not really sure if it will rise higher, because in silver, actually the cycle was incomplete. So that is where, after such a good rise, and over here we were not seeing a follow-up buying, so there was always a bit of a concern, and also dollar index, which was not breaking down. But now finally, I think it is coming back towards its previous low. You can see a cycle complete over here. In fact, like I mentioned, silver had not completed the cycle over here. Okay, so that is where there was a risk of a decline over here. And even if you see in silver, there is a 5-wave decline. Now, many will say that this is a 5-wave decline, that this could be a start of a downtrend. But I think, maybe the rise from year to year was one impulse, and then this is ABC, like we are seeing in the dollar index. Okay, dollar index, we had seen we had seen a decline in B, so it was A, B, and now we are seeing a 5-wave rise in dollar index, right? So this is opposite of that. This is A over here, this is B, and this is C we are doing. Okay, so the dollar index ka main trend is down, and silver and gold ka main trend is on the upside, I believe. And also, when you see the breakout of silver, it was from this, I think, 1.5 2 years of downward sloping trend line. It broke that, it went higher, and now it is retesting that. Now that retesting is coinciding with a ABC decline which can potentially get over. So over here as well for the silver, the first confirmation will be a positive daily close. If we get a positive daily close, then the high of minor degree wave 4, which is 23, sorry, so the high is 24.20. If that gets broken, then we can further say that this 5 wave decline is getting complete, and maybe the next leg of up move in the silver can start. So I think gold and silver ka setup is very much similar. I think this consolidation in gold should get over. So over here in gold, we are not seeing a clean 5 wave decline, which means that this could be WXY, and it might be doing some complex correction, because I even saw the hourly chart. And even if you see the hourly chart, the first decline was a clean 3 wave decline. Okay, which means that gold is possibly doing some kind of complex correction in wave 2. So over here as well, I think once we break above the 20-day average, so that's where I think we can be more sure of gold completing its sideways correction. But in silver, I think the corrective pattern is lot more clear, and the big monitorable factor would be how we get a rise post the 5 wave decline. If it is corrective, then there can be a threat of a decline. But I think the way technical setup, I mean, the breakout retest is playing out, and also I believe this is ABC decline that is unfolding. So both of them are telling that maybe some correction should get complete over here, and the silver should start inching higher. And this will also coincide with the dollar index, which actually might be completing its pullback. I mean, after this decline, it will be completing its pullback, and then it can resume the next leg of down move. And that generally is good for gold and silver. And, that is how we are thinking right now. And also, dollar index, if you see, I mean, it has not affected the emerging market index much, because so I have this template for the emerging market index, and typically a rising dollar is actually not so good for the emerging markets. But you can see over here, I mean, Taiwan index, that is actually breaking out from this consolidation, which it had seen. Okay, so it had seen some consolidation for last, I think, 3 months or so. Now that consolidation seems to be breaking out on the upside. If we see other index, I mean, apart from Brazil, no one has really made a higher high. I mean, they have gone up and they are consolidating. They have gone up, they are consolidating. In fact, if you see Thailand, it is kind of forming a base. If you see Jakarta index, if you see Jakarta index over here, even that is more or less sideways since a very, very long time. Okay, even if you see over here, it seems to be forming a base. Then if you see the Chinese index, it is kind of consolidating. So nowhere we are seeing, a panic selling or large selling. So that is again giving me that confidence that maybe dollar index is just seeing a counter trend rally. And I think once that fizzles out and it starts its next leg of down move, that is where I think even equity might end up doing well. And we might even see gold and silver also performing.
Correct. Makes sense. Talking about gold and silver's correction brings me to Nifty. And I've been seeing Nifty correct since the past couple of days. I want to know if
Right.
this correction is going to be short term. Is it deeper? And are we likely to test the March 2022 low, which was around 16,800?
No. So I don't think that the case for revisiting March low, which is this, is on the cards. Now, there are two alternate counts, which even we are scratching our head and we are thinking that how do we really approach. But see, one thing, it is very important to understand, once the bull market starts, okay, which I think we have started a bull market. So typically you would see the 20-day average holding out. Okay, see, I can show you in the past instances as well, where when we got a good rally, okay, you would see over here when we got a rally from year to year, there was 20-day average which was holding out, or if you see the rally from year to year, the 20-day average was holding out, the RMI was whipsawing. So whenever you see RMI whipsawing, I think 20-day average works very well as a trailing level, because what happens is that this is ultimately rate of change. Okay. So if the market is not moving higher at the pace how it was moving higher earlier, then the momentum will start showing that it is fading away. But I think as long as the 20-day average holds, because that was true over year as well, and it will be true over year as well, that as long as the 20-day average holds, I don't think there will be a deep correction as such. I mean, we will just move higher, we'll consolidate, we'll move higher, we'll consolidate, we'll test the averages, we'll move higher, and that is how the bull run also, I mean, the bullish trend would be very healthy, because whenever we see these kind of minor degree correction, those are healthy signs, and it removes the froth in the market. So I think as long as the 20-day average, which is right now at 18,053, if that does not get broken, then I think the uptrend is intact. It is only when we see 20-day average correcting, I mean, getting taken out on a closing basis, that is where, then we would think a possibility of a correction up to the 40-day exponential. And right now, if you see 40-day exponential, that is somewhere around 61.8% of the recent rise. Okay, this is the 61.8% mark. Wait, let me do the colors. Yeah. So it is around the 61.8% mark. So I think that can be the worst case scenario if the 20-day average breaks. And so that is how we are working with this view right now. Now we need to see whether those levels break or no. But I think firstly, as I mentioned, 20-day average will be very crucial one. Now, if you see the BSC's small cap index, okay, it is almost back towards the previous high. Okay, if it sees a breakout over here, then that would actually mean that the next leg of the rise is starting. And we had mentioned this earlier as well, that it had nearly retraced 61.8% of the previous rise. So this means that this was wave 1, this is wave 2, and now probably wave 3 is starting. Okay, in which case it should eventually head much higher. Now, if you see BSC mid-cap index, that has already, broken the previous high. It's just that now it needs to break out above that and it needs to consolidate. That is where it can see, further momentum picking up. But the broader thing, what I'm trying to say is that the highs of the previous rally are getting taken out. Okay. This is a very good sign, because we saw a healthy correction. Now, once this healthy correction is complete, we are seeing a nice rise in wave 3, and wave 3 are typically strong, as you're seeing over here. There have been barely any down days. In fact, when you see other indices like auto index, that has broken out from this range, and it is at a life high. If you see, I think PSU index, that is one index, now which is trying to break out. So even if it breaks out from this congestion, it would mean that this is 1 2 1 2 3 4 3 4 5 that can come by. So there can still be a long way for PSU. And not to forget, if you see the weekly chart, okay, let me remove the bands, you will see that this major congestion can then be taken out. And if that happens, it will be a multi-year breakout, and I think PSU index will be roaring, because as of now, due to government-owned companies, people are neglecting, and that is why there is a deep value over there. If you see most of the PSU stocks, they are trading at 6, 7, 8% dividend yield. So that is where I think, this can be one interesting sector which one can watch out for. Then the other index, which is doing very well. So now I showed you the chart of the PSU index, right? PSU index is somewhere over here, because you can see over here that in the past, I mean, for capital good index also, this was a big barrier. Once this barrier was broken out, I mean, you have barely seen any correction in this. Okay, so that is where I think PSU index is right now. I mean, it is somewhere over here. Once we see a breakout, there will be a pullback. There will be a test of bulls, but eventually it will make higher high, and it should go much beyond its previous peak, which it had formed in 2008. So that is how the index are poised. And if you see specifically the capital good index, you can see over here, wait, I'll put the bands. So you can see over here the 20-day average is holding out, and it should also eventually continue to rise higher. So we are seeing right now a lot of rotation. Okay, so my sense is that maybe on index we may or may not see big correction. It can turn sideways, but internally you'll see a lot of rotation, and the stocks will continue to inch higher. Some or the other index will come to save the Nifty index. And on the Nifty index, on a broader index level, we might not see correction, but individually there can be a lot of churning that can happen.
Makes sense. But now it does not seem to be like a crisis is hitting us or things. Things are just very normally being placed as it should be. So yes.
So actually, if you see, the news flow is very bad. Okay, I mean, you are seeing, banking crisis in US and everything, and because of that, people are worried कि यहाँ पे कुछ होगा, things will falter.
The local election news and all of those things also.
Yeah. In fact, Karnataka election, I mean, that was a setback for BJP. So now people are extrapolating ke what if the government doesn't come back in 2024? Can this be a risk, etc., etc.? I mean, people are trying to extrapolate many things, but despite of that, the price action is telling us that nothing much has changed, and the trend still looks bullish.
Correct. Makes sense. This is a very good ending to wrap up the entire thing. There is flow, there are things, but the price action is holding on, so people can calm down a little unless it becomes otherwise. So yes, thank you so much for this entire session. Thank you.